All right, this is Mrs. Applegarth, and I am going to go over financial analysis, our Chapter 2, Section 2, State Income Tax. If you're lucky enough to live in a state without income tax, yay for you. But right now, all my students live in California, and there is a state income tax in California. Our lesson objective is to compute state taxes on a straight percent basis. When you see straight percent, just be like, thank goodness. Because if you remember last chapter when we did graduated income tax, that is ridiculous. So we're going to talk about exemptions today, just as a vocab word. How are the taxes you pay used? Heidi was surprised to see how much was taken from her earnings to pay taxes. I personally have about 45% of my paycheck is taken out in taxes. It's very fun when you get your paycheck and you're like, oh, and then you look at how much you actually made and you're like, oh, that would have been a lot of money, but okay. She remembered from history classes that U.S. citizens' taxes support government at 3 levels: federal, state, and local. We looked at federal last session. We're looking at state, and the next section, guess what? We're going to look at local. State income tax. Most states require employers to withhold a certain amount of pay for income tax. In some states, the tax withheld is a percentage of taxable wages. Your taxable wages depend on exemptions. You get a little credit if you have an exemption. Or they're also called withholding allowances, which allow for supporting yourself, your spouse, and others in your family who are dependents. And unfortunately, my sweet, sweet students, if you're taking this class, you're probably a high school student, and you probably will not have dependents or even be supporting yourself. So those two things have to happen in order to get exemptions, which if you have enough exemptions and your employer takes out more taxes than necessary because you're not counting for the exemptions, then you get a return. So most of the time, young people like yourselves, because you don't have dependents, you are you're not eligible for like a tax refund. All right, so the first thing we're going to do is we're going to figure out taxable wages. Please remember, when we get to state income tax, it has 2 steps. Step number 1, take your annual gross pay and minus out your exemptions. Step number 2, to calculate your state income tax, take your taxable wages, which you just calculated, and multiply it by the tax rate. So this is why we spend so much time figuring out the percent key on our calculator, because we're using that doggone percent key over and over again. All right, our example is Tony. He makes $44,750 a year. His tax rate is 3%. So he gets an exemption for himself and 1 for his child. So how much does Tony's employer withhold yearly from his gross earnings for state income tax? So the first thing we're going to do is we're going to figure out, it doesn't say he's married, so we're going to give him the single, it just says for himself. So we're giving him the single exemption, and we're giving him the child exemption. So we're going to subtract $4,000 from his annual gross pay. So he is not going to get taxed on $4,000 of his $44,750. So he's only going to get taxed on $40,750. The good news is, the smaller the amount they use to calculate your tax, so the more you can subtract out, the smaller the amount of taxes you have. So we're going to take his $40,750 and we're going to multiply it by the 3%. So he gets $1,222.50 annually taken out of his paycheck, just going to the state. Remember, this does not include federal income tax that we calculated before. This is in addition to that federal income tax. Okay, so let's practice this. Our gross pay is $23,760. We subtract $400 because he's married, $4,000 because he's married. We subtract $2,000 for each dependent, so that he has 3 of them. Boop, boop. Now you can choose to combine all these together. So 4,000 minus 2,000 minus 2,000 minus 2,000. So that is minus $10,000. Wow. That is minusing a lot of tax credits. 40, 60, 80, 10,000. Okay. I don't even need a calculator for that one. I know that is 13,760. Then we're going to multiply it by the tax rate, which is 4%. And then let's pull up our calculator and do that in real time so you can see how to use a calculator. Oh, I got my percent key. I've only been without a percent key for so long. Okay, so times 4%. Oh, that did not work right. Now I just have to figure out how to use it. I think it just gave it to me. $550.40. Let's just make sure. This is why I have you guys get your calculators out. Oh my gosh. No, stop it. 13,760 times 0.04. Yeah, $550.40. Sometimes you have to check to make sure your calculator is talking to you right. So $550.40. Boom. All right, so now we are going to try that again. 43,300 is our gross pay. We are single, which is minus 2,000. And we have 1 dependent. We take care of our Nana. We love her. So, but we're going to minus 2,000 for her. And when we do that, we get 39,300. I know, I'm getting good at this. Our tax rate is 5%, so we're going to multiply that by 5%. Now that I know how my calculator works, we go 3,9,300 times 5%. 1,965. Dollars is withheld per year for taxes. I'll circle that too. Boom. All right, your guys' job now is to finish this practice assignment. What? That's right. It's going to be fun. You guys are going to be amazing at it. All right, go ahead and finish your practice, and that is all for this lesson.